As the European Central Bank cut rates to help the resilience of the Eurozone economy, we did get some good news. Industrial orders in Germany's manufacturing sector unexpectedly grew 0.6% in April, helped by pickup in domestic demand and raising hopes that the long-challenged economy is starting to recover. Analysts had expected a fall of 1%. On Thursday, the European Central Bank announced a 25 basis point interest rate cut, taking the deposit facility rate to 2% and also down from a mid-2023 high of 4%. But our deep dive is on China's expressed interest to invest in local production of electric vehicles in Nigeria. I had a phone chat with Joseph Tegbe, Director General and Global Liaison for the Nigeria-China Strategic Partnership. His role is pivotal at a time when China is redirecting its electric vehicle strategy in the face of mounting tariffs from the US and EU, gradually moving from these established export markets towards emerging ones such as Africa. The Chinese ambassador to Nigeria, Yu Donghai, revealed plans last month for EV and battery plants which will boost local industrialization as well as help Nigeria to capitalize on the rich deposits of lithium. Hello, welcome back to Global Business Insights, where we take a closer look at the main headlines moving markets all over the world. First, some of the main business stories. Amid simmering trade tensions, it was reported that Trump and Xi Jinping held a phone call at which they agreed to launch a new round of high-level trade talks as the leaders of the two countries sought to ease commercial tensions. The United States president also walked back threats to revoke visas of Chinese students, also saying Harvard is now more cooperative as it banned citizens of 12 countries from entering the US in a sharp expansion of his anti-immigrant policies. At a press conference, Trump hinted that Elon Musk, may be hostile to the new tax bill to safeguard his personal business interests. The Nasdaq Composite closed down 0.8%, dragged down by a 14% sell-off that cost about $150 billion in market capitalization of Tesla shares as a public spat played out between President Trump and Elon Musk. Boeing has agreed a settlement worth $1.1 billion with U.S. Department of Justice to avoid prosecution for two crashes involving the plane maker's 737 MAX jets. The agreement includes paying $445 million to families of the 346 people who died in the accident and commitment to invest around $500 million to improve its safety and quality control programs. The German Chancellor Friedrich Merz, who is pushing a 46 billion euro package of corporate tax breaks to jolt the Eurozone's largest economy out of slumber, held his first face-to-face meeting with Donald Trump, which came across as a friendly dialogue. On the agenda were discussions around the war in Ukraine, the ongoing conflict in the Middle East, and tariffs. On data, the number of Americans filing new applications for unemployment benefits last week increased for a second straight week, pointing to softening labor market conditions. The Wednesday print from the private sector ADP Jobs Added report was also weak, encouraging the president to call for a more dovish Fed. Initial claims for state unemployment benefits rose 8,000 to a seasonally adjusted 247,000 for the week ended May 31st. The closely watched non-farm payrolls will today shed more clues on the job market. Indian and US officials met this week to finalize tariff cuts in sectors such as farm and automobiles as part of an interim deal, with an announcement likely to be made soon. A U.S. delegation led by senior officials from the Office of the United States Trade Representative began closed-door two-day discussions in New Delhi on Thursday with Indian trade officials headed by Chief Negotiator Rajesh Agrawal. But let's listen to Madame Lagarde as she also confirms that she expects to finish her term at the ECB and not going to lead the World Economic Forum as was speculated. She also comments on the rate decision, which she confirmed was virtually unanimous.
So in conclusion, the Governing Council today decided to lower the three key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. Especially in current conditions of exceptional uncertainty, we will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. And in any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission.
Now to China and electric vehicles and a pivot from the West to Africa. Chinese electric vehicle giant BYD was reported yesterday to be planning to nearly triple its dealership network in South Africa by next year as it looks to grow its market share in Africa's largest automotive market. The Chinese ambassador to Nigeria last month confirmed plans to produce EVs in Nigeria, enabling it to emerge as a manufacturing hub for EV production in West Africa, leveraging also availability of key minerals such as lithium. President Bola Tinubu last year appointed Mr. Joseph Tegbe as the Director General and Global Liaison for the Nigeria-China strategic partnership reached by the two countries during the president's visit in September. In a phone chat I had with Tegbe, he said that while the three main top priorities will remain energy infrastructure, steel manufacturing, and agriculture, Nigeria can learn a lot from the Chinese transformation and needs to emerge as the next China at a time when many headwinds are holding back growth across the world. A key component of an ongoing green industrial arms race between Europe, the United States, and China is locking in access to critical raw materials, which are crucial inputs for batteries and solar panels. An electric vehicle battery, for instance, requires about 157 pounds of graphite, 90 pounds of nickel, 49 pounds of copper, 20 pounds of cobalt, and 18 pounds of lithium, roughly. The demand for lithium is projected, however, to increase by up to 18 times by 2030, and Africa could be supplying a fifth of the world's needs. Africa already produces over 2/3 of needs for cobalt, bauxite, platinum, and many other such strategic materials. China controls almost the entire supply chain from extraction and shipping to refining and processing as it moves to invest in production infrastructure as well as in mines. The interest in Africa, given its wealth of raw materials, has been always there. For example, new solar partnerships in North Africa are set to deliver electricity across the Mediterranean. African uranium deposits will drive the revival of the nuclear energy industry across Europe. And the world is seeing a Chinese domination of the EV market unfolding with little resistance. BYD, which recently became the world's leading EV maker, surpassing Tesla, slashed its prices by 30% as it pitched affordable vehicles in a market astonished at the pace of disruption. In 2023, China was responsible for 58% of the 13.7 million passenger battery electric vehicles and PHEVs, that is plug-in hybrids, sold globally. That's 5 times the size of the US market and 7 times that of the world's third largest EV market, Germany. China's competitive edge was not an accident nor a fluke. nor did it happen just overnight. As early as 2001, the Chinese government took steps towards transforming its existing supply chains towards the production of EVs, introducing this technology as a priority science research project in China's 5-year plan. Massive state support and subsidies also fostered the growth of the EV industry that enabled Chinese manufacturers to achieve economies of scale that were hard to match. China also controls a significant portion of the global supply chain for key EV components, particularly rare earth elements and lithium-ion batteries. Also, innovation matched with low pricing is leading to a variety of brands fitted with all the latest technology. Looking at Nigeria and China, both must strike a win-win. China is eyeing a vast market in need for affordable mobility solutions and access to rare minerals. Nigeria's main need is energy. Looking at new technologies, electrical vehicles are also easier to make instead of, say, more advanced chip and semiconductor manufacturing. But the value chain still needs a high amount of electricity. This implies significantly augmented electricity supply must feature prominently in the solution for this to work. Beyond energy, Nigeria needs an export-oriented, value-added economic long-term vision, and it really can't be a quick fix. But we can also learn from the recent experience of Pakistan with China, where in an FT article this week, it was reported that a combination of a global glut of lithium, a key battery material, and overcapacity of lower-tier China-made batteries has created a flood of cut-price battery energy storage systems for lower-income countries such as Pakistan, and literally destroyed competition in that space in those countries, where key inputs like rare local skills are limited and you have poor infrastructure limiting domestic capacity. It's easy to see how the best intentions to add value locally is abandoned, and instead a flood of components are dumped into an overwhelmed economy that did not see this coming. In Pakistan, more households are actually switching off the grid to more affordable, cheap Chinese solar panels. Pakistan's Power Minister Awais Lagarde says government wants a more competitive electricity situation, adding that competition is a very healthy way to bring about efficiencies in the entire system. But with heavy state-supported Beijing subsidies or dumping, it is less clear if this is actually healthy competition. India has a more cautious approach towards Chinese investments, leading it to reject last year a $1 billion investment proposal from automaker BYD for electric vehicles. According to Commerce Minister Piyush Goyal, he added that for now it's a no to further BYD investments in India. I do not want to be reminded that it is bad manners to look too closely at the mouth of a gift horse. So I close by saying, as we collaborate with China, Nigeria must be more clear on its own priorities and interests and invest, importantly, in local skills, the Nigerians that will make the Nigerian Renaissance happen. Expecting China to ignore its interests and not take advantage of some of the vulnerabilities in Africa is naive and only tells us we've learned little from the experience with the oil and gas sector when oil was first discovered in 1956 by Shell BP. In a subsequent episode, we hope to bring you more insights from Joseph Tegbe, who is presently on a working trip in China, working hard to establish the right foundations for a fruitful collaboration. Asia-Pacific markets were mixed as investors assessed the phone call between US President Trump and Chinese President Xi Jinping. Both agreed for officials from the US and China to meet soon to continue negotiations aimed at ending the ongoing trade war. Tesla shares gained almost 5%, recovering from the previous session after it was reported that White House aides have scheduled a call with CEO Elon Musk to ease tensions following a public feud. Well, that's it in this edition of Global Business Insights. This is Bode, ososami. Bye-bye.